You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 18th day of July, 2017. Hope you're having a great Tuesday. Thanks for joining us. If you are returning, welcome back. If you're here for the first time, then a special welcome to you. Let's take a quick look at the numbers around the world and see exactly what's going on out there on the big blue marble. Now, if you can't see the chart I have up, not a problem. Go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions, and you'll be registered through the end of the month, which means you'll be able to join the show with one-click access. You'll also be able to see the charts and access the chat box. The other option, youtube.com/CFRN, and where it says live, just click there and you're in. Okay, these are the cash markets, and we'll start here in the U.S. The Dow is down 85 points. NASDAQ is up 13. S&P 500 down 1.5. and the Russell 2000 down almost 7. No movers, no shakers. The closest we have is the Russell 2000, which is down almost half of 1%. In the commodity market, crude oil up 19 cents, trading 46.21 last. Gold up $8.90, trading 12.4260 last. Now that's almost 0.75% for gold. As we go to the Asian markets, the Nikkei closed down 118 points, a little over half of 1%. Shanghai closed up 10 points, and the Hang Seng closed up 54 points. Nikkei is the only mover and shaker there. So the Asian markets are mixed, as were the U.S. markets, and now in Europe it's all red. FTSE down 13 points, make that 14. At the close, the DAX was down 156 points. That's a little over 1.25%, and the CAC down 57 points, and that also a little over 1%. So Europe deeply red, Asia mixed, nothing too terribly serious there. And here at home, well, you know, the S&P 500, it's the bellwether, and what we're looking at are last week's weekly trading zones. On Thursday, we revealed the current zones to the entire community. The partners get them every Monday morning at 9:30 a.m. Eastern. Or I'm sorry, 6:30 a.m. Eastern, before Wall Street wakes up. And once the zones are issued, they're carved in stone for the week. We don't change them, massage them, manipulate them, any of that. Once they're out, they remain the same. And I got to tell you, this is a pretty narrow range. Okay, the high that we've had on the week so far, 24.60.50, and the low, 24.48. 12-point range. I realize today's only Tuesday, but for so many years, the average daily range was 20 points. Well, not so much anymore. Now, the health care bill that we've all been chewing our nails over, the effort to repeal and replace Obamacare, in one fell swoop, crumbled yesterday, and another revival doesn't appear to be likely. Republicans, Senators Jerry Moran and Mike Lee announced they would oppose a key procedural step to bring the Senate GOP bill, the Better Reconciliation Act, to the floor for debate. The two joined GOP Senators Susan Collins and Rand Paul in opposing the motion. Republicans needed 50 votes, no more than 2 defections, to move the bill forward. Politico reported that President Donald Trump was with other GOP members at a strategy dinner for the bill when Lee and Moran announced their intention to oppose it, blindsiding the White House. Immediately after the announcement, other Republicans called for the conference to abandon the current track and work on a bipartisan approach. Boy, did the wheels fall off this one. There seems to be an appetite for repeal only. We'll have to wait and see. Repeal and replace, repeal. Something has to be done. Question is, who's going to do it? I don't know. All right, with that said, Michael, if you're ready.
I am ready.
Okay, he's going to pop in here, give us a recap of everything that happened in the live training room today.
I am going to do that.
Got your charts.
Good.
It's all yours.
All right. We'll do this then. All right. Good afternoon, everyone. Today is Tuesday, the 18th day of July, 2017. Yesterday was 7/17/17. Okay. Just wanted that noise to go by. All right. If you have not taken a free trial with us, go to the homepage here at CFRN.net, and right up here at the very top where it says sign up for the CFRN Live Training Room, 100% free trial, use our indicators, learn our strategy, click here. You just click there. Then put in your first name, put in your email address, click on register now. Okay, first name, email address, register now. That's all you have to do. Okay. Once you do that, you'll be sent a confirmation link. Then you have to click the confirmation link. Then you'll get all the information you need to spend 5 luxurious days in our live training room. Okay. All right. Spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosure stuff down at the bottom. Today is the 18th, and we got our goal for the day by the skin of our teeth on the last trade right before we did the spreadsheet. Today we had 2 ticks in the euro, 8 ticks in crude, and 1 tick in gold. That put us at 102.50. 102.50. Took 114 minutes today. I think that's right. 120 minus 6. Yeah, 114 minutes and 9 trade opportunities to get to 102.50. And we took a total of 9 trades. So on the month now, we're at 1446 and a quarter. That's over 10 days, averaging 144 per day. On the year, we're at 20,381 and a quarter. That's over 132 days, averaging 154 per day. This is 1 contract, 2 hours a day. Okay, 1 contract, 2 hours per day. All right, so let's get into what happened or didn't happen. In gold, we had a break even here, a break even here, and +1 there. During the break, well, at the end of the session, we had gone short here, but then it took too long, and we finished the morning session. So I didn't count that toward anything. There was going to be a win or a loss. And it changed directions in here. There would have been a long trade right there. Okay, right there. Would have been a nice long. It's pulling back now, giving another opportunity for a long, possibly. Okay, on the euro, we had +2 right there and a break even right there. We missed this one right in here. That was right at the end of the session too. But you're not going to see me miss many today. Crude, we had good movement in the pre-market. You see that right there? Nice movement in the pre-market. If you were up, taking them. But we had a break even, another break even, a +1, a plus. This was a +5. This was a plus. I'm sorry. This was +2. One of these was a +1. This one was a +1. So we had +1, a break even, +2 to put us at 3 right there, and +5 here to put us at 8. Okay. And during the break, it was not really trending. So there wasn't really anything during the break. Soybeans, we were looking at the soybeans today. There was this one right here that I hadn't realized was going on because we were in a crude trade. And it was bounced off the BBC. It pulled back 7 ticks. Our stop is always 8. So it pulled back 7, and then it went up, and it didn't put in a higher swing. And then it just went sideways the rest of the morning session. During the break, there was a shorting opportunity. No, there wasn't. No, there wasn't. Because this would have been a momentum short going down into dynamic support, so we would not have done that. Okay. And the ES was a total mess today. This morning it started out right over here, went up into the zone, and it just stayed in that zone till all the way over here. Then it dropped out of the zone and went right back into the zone. And now it's just up above it, just a little bit. So the only trade opportunity on the ES would have been a long right here. There. That would have been a break even. Okay. I know that was fast, but well, can't make things up. All right, today is the 18th. We made 2 ticks on the euro, 8 ticks in crude, 1 tick in gold. 1 tick in gold. So, soybeans is the big winner of the month so far. Looking at the totals here. Yeah, it is. Anyway, last month what was? Last month, crude oil was the big winner of the month. Anyway, on the month now we're at 1446 and a quarter. Over 10 days, averaging 144 per day gross. On the year, we're at 20,381 over 132 days, averaging 154 per day gross. Okay. All right. If you have not taken a free trial with us, go to the homepage here at cfrn.net and go to the homepage here at cfrn.net. Right up here at the very top, where it says "click here," click there. It's going to bring you to this page, this fine landing page. We can get a little video going down there. Fine landing page. Anyway, put in your first name, put in your email address, click on register now. When you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, you got to click that confirmation link, or you will not get into the free trial. All right, can somebody type something into the box, and I will post the link for the meeting at 1:15 this afternoon. So let me just type anything. Y and N. Hello world. Okay, that works, Bart. This is the link to the meeting at 1:15 this afternoon. Okay. That is the link to the meeting this afternoon at 1:15. All right, and with that, I am done with my recap, and I can pass everything back out to Studio A in fabulous Phoenix, Arizona, overlooking America's largest city park. Dwayne, if you are ready.
Yep, I'm ready.
Okay, good. Good.
There we go. Okay, John got a headset. He was going to attempt to join us via the headset today as opposed to the telephone, so I don't see him logged in yet, so.
Yes, I do not see him either.
Maybe the machine he's logging in on is still Windows XP. No, I'm sure he's running 7 or at least everything. Oh well, not a lot happened, so we won't waste a lot of time. All right, Michael, this morning, recap of the recap.
Today, oh, you know what? I didn't write it down. I have it right here, though. Hold 1 second. Today, it took 114 minutes and 9 trades to get to 102.50. 114 minutes and 9 trades to get to
Good job.
102.50. Yeah, let's read it the last minute there. Literally, the last minute. 4, 5.
The main thing is you got it done.
Yes, yes.
Now, guys, as you can see here, this is pretty much a flat line for the whole week. This is the S&P 500 since the Globex opened Sunday night. Bounced and bounced and bounced and bounced, and now we might be in a position to put a leg down, chew the downside. We'll see. It's obvious that the market's having any difficulty getting above 24.61 and sticking. There's a high and lower high and Double top. Yeah. We're just jammed up in here. So, what do? We have to wait it out. That's really all we can do. As far as headlines go today, Netflix crushed its growth targets, adding more than 5 million new subscribers for its second quarter. Revenue and earnings per share were in line with the analyst guidance, and the results sent the stock up 8% on the day. Now, there's an article the other day that talked about how much money Netflix is using or losing, and how much they could add to their bottom line if they became a little stricter on the login ID and password. They tightened up a little bit, but they haven't completely tightened it up. And we're talking about millions of dollars being left on the table every quarter. And even with that, stock up 8% today. Investor and startup platform AngelList has suspended an employee, Lee Jacobs, as it investigates allegations of assault. According to TechCrunch, Jacob allegedly assaulted a woman at an event in 2013. It's now 2017. Yes, the wheels of justice do grind slowly. A security flaw in MySpace meant that someone could hack into an account knowing just the user's real name, username, and birth date. It isn't clear if any MySpace accounts were affected by the vulnerability. Is there still a MySpace out there? You know, it was like all the it was the big deal there for a while, and then it just wasn't. Google's troubled high-speed broadband business, Google Fiber, is losing its new chief executive just 5 months after he joined. It's almost like every company is having this major exodus from the C-suite. Gregory McRae was hired to head up Access, the Google division, which includes Fiber, and nobody really knows why he left. I'm going to guess somebody offered him more money. It's a long shot, but it could happen. Uber's global retreat continues after it pulled out of China-controlled Macau. The company said it couldn't secure the right business environment and leaves after less than 2 years in the market. Amazon has registered a trademark application for prepared food kits, suggesting the firm's about to take on the likes of Blue Apron in meal kits. Blue Apron sank 11% on the news. Now, we talked about that a little bit yesterday, but where did I see that? I saw a picture this morning of exactly what the new Amazon meal kit looks like. And by the way, folks are getting sick at Chipotle again. You know, I never did enjoy their food. I'm sorry. I just didn't. My wife and my family, they're quite fond of it. Amazon's new meal kits are already on sale. Here's what they look like. Tacos El Pastor with pork. Now, that's probably going to be the final nail in the coffin for Blue Apron. Amazon's up $16.80 today. Amazon's new home delivery meals are being sold to select customers on Amazon's U.S. website. Amazon meal kits, which aren't yet available in the UK, contain all the ingredients required to cook a selection of meals chosen by the customer. They're available through Amazon's $14.99 a month grocery service, Amazon Fresh, which can be used only by customers who have signed up for the Amazon Prime, which costs $10.99 a month. Amazon filed a trademark application on July 6 for prepared food kits as it looks to take on the likes of HelloFresh, Blue Apron, and Gusto. Stock in Blue Apron plummeted by about 11% as investors learned of Amazon's plans to start directly competing with meal delivery companies. After the various subscriptions have been paid for, the Amazon meal kits work out to be about $8 to $10 a serving. There are 17 meals to choose from, including tacos al pastor with pork and roasted cod with cannellini, bean ragu, and pesto. Each box contains just the right amount of ingredients and what the company describes as easy-to-follow, chef-designed recipes. One Amazon Fresh customer named Josh Chad told GeekWire that he started to see the Amazon meal kits appear online about a week or two ago. While user reviews suggest that the meal kits have been available since late June, Chad reportedly said that the Amazon meal kits were slightly smaller than recipe boxes offered by other companies he had tried, and that everything was fairly easy to recycle, with the exception of a couple of plastic bags. Amazon began life as an online bookseller, but today it's on a mission to become the go-to destination for an increasing number of shopping needs. The food industry is the latest market that Amazon is aggressively targeting. Last month, Amazon acquired the supermarket chain Whole Foods for $13.7 billion, and the tech giant has also set up a restaurant food delivery business to take on Deliveroo and Uber Eats. I'm telling you, they're bent on taking over the world. Amazon did not immediately respond to any requests for comments as to what they might be up to next. So, well, there you have that. Cat's out of the bag. Uber's global retreat continues after it pulled out of China-controlled Macau. The company said it couldn't secure the right business environment and leaves after less than 2 years in the market. Internet archivists are trying to download the bulk of files stored on SoundCloud in case the streaming service shuts down after job losses. One Redditor claimed he had downloaded 900 terabytes of SoundCloud files. I don't know if anybody's asking him what he's going to do with them, but it would be interesting to know, would it not? Alright, I still don't see John logged in there. So I'll call him in a minute and see if he needs help with that. Hackers, ever on the job, hackers never sleep. Reportedly stole $8 million in the cryptocurrency Ethereum during a disastrous initial coin offering. CoinDash had to warn investors their funds had been stolen minutes after it began raising the money. Oh, that's tough. Hand tracking firm Leap Motion has raised $50 million in Series C funding to expand its human-computer interaction technology. The firm will expand into different sectors and open a new office in Shanghai. And the entire board of Hampton Creek, a Silicon Valley startup famous for making eggless mayonnaise, has quit. The whole board. I'm telling you, these mass exoduses are catching on. Everybody left but the CEO, Josh Tetrick. The reason all the other board members quit? They simply couldn't get along with Tetrick. Yesterday at our good word for the day, we talked about being called to a special work, that each part, each person has their own specific job. Well, don't let fear stop you. 2 Timothy 1:6 says, kindle afresh the gift of God which is in you. Don't let fear make you hide your talents and abilities. God expects us to make the most of all He has given us. He wants our hearts to burn brightly for Him. He wants us to invest in our own growth and to learn how to be more effective for Him. Paul wrote to the people of Philippi in Philippians 1:9, keep on growing in knowledge and understanding. Be sure to use the abilities God has given you. Put them to work. 1 Timothy 4:14. And also kindle afresh the gift of God which is in you. Just as when you don't exercise your body, your muscles lose their strength. When you don't exercise your God-given skills, they don't maintain their level. Remember the story of the fearful servant who hid his talent in the ground, and what happened to him? Take the talent from him and give it to the one who has 10 talents. Matthew 25:28. So put your gifts and abilities into practice so that you'll become more proficient as time goes by. Maturity and experience don't spring into instant life the moment you start. Practice, study, and feedback all help you grow. Become a lifetime learner. Work hard so you can present yourself to God and receive His approval. 2 Timothy 2:15. Take advantage of every opportunity to sharpen your skills. Remember, in heaven we're going to serve God forever, and we prepare here on earth. And God will reward us for our faithfulness. Well done, you are a good servant. You have been faithful with the little I entrusted to you, so you will be governor of 10 cities as your reward. That's Luke 19:17 from the New Living Translation. Don't let fear stop you. This is just a proving ground. We're going to step into eternity, each and every one of us, someday. There's no escaping it because it's eternal. So keep that in mind as you sit in prayer today with God, speaking little, listening much. Let Him speak into your heart the plan that He has for you. And then get busy, because time is short. And that's our good word for the day. Okay. Now, John was excited about his new headset. And let me take a look one more time. Okay, I'm putting you on hold 1 second. Be right back. I'm going to see if he's going to make it in. Okay, so is your headset not working?
I was just about to link on the thing. Just 1 second. Are you ready to go? Ready for me to come on now?
Yeah, if you can get in.
Okay, hold on. Wait a minute. Here we go.
Yeah, just you only have to do that once a month. Every day it'll send you an email with a link to click and get in. It doesn't matter what you answer.
Okay, go to webinar, right?
It should say join the webinar in progress at the bottom, I would think.
Yeah,
But
I'll get that. Okay, saying the audio will begin automatically in listen-only mode.
yeah, what name did you log in under?
Don, the name that was on the thing. Don Richardson.
Okay, because I don't see you.
Or it may be still doing, still got a little hour thing going on. Oh, here we go. Meeting started. Okay, so what's up?
Okay. Yeah, now what I don't see is a microphone by your name. You're logged in, but I don't see a microphone by your name. So there's usually a little symbol there, and I can unmute it. But you don't have a symbol by your name. Do you have your microphone plugged in, your headset? System's not recognizing it. Hang tight, guys. We got him logged in, but we can't get his microphone activated. 1 second. Hey, John, just call in. Alright, he's wrestling with that thing. Got him a new headset. And what do they normally do? Not work. Why is that? I don't know. Alright, last night on the S&P 500 Emini Futures, we were looking to be buyers at 24.66, sellers at 57. So for 2 days in a row, 66, actually at 57, we actually caught that one, right? there. $24.57. And this first swing low took us down to 24.50, so that's a 7-point move. After the pullback, we extended the move down. We made it all the way down to 24.47, but anyone trailing their stop here, obviously we're going to be stopped out with whatever profits you had in the move, and we didn't come back quite far enough to trigger a second trade. Moving on to the Dow. Of course, these also are last week's weekly trading zones. And on the Dow, if you didn't get your screenshot, go ahead and grab it. We were looking to sell 21,575. Alright, and the alerts went out last night at 20:45, so that's 2100 right there. Okay. So from 575 down 575 to 416. That would be if I had a calculator. Hmm. $159 points. On the long side, we were looking for 595, and the swing high was 609. 14 points to the upside, 159 to the downside. John, I just noticed that your microphone showed up. I don't know if you can hear me. Let's see if I can hear you.
I can indeed. Can you hear me?
Oh, yeah, I can hear you great.
Great. Fantastic. We're on.
Yeah.
How is the sound now? Is it better than normal?
Oh, yeah. Yeah, to me it sounds good. How about you guys? Can you hear John okay?
That's great. Thank you. Okie doke. Well, it's very, very volatile right now. Well, by the way, if I take a little bit of credit for our theory yesterday about Netflix and the fangs, that if the news was good on Netflix, excuse me, the fangs would respond. They're not setting the world on fire totally today, but they're up, in a kind of a difficult market, really. And so the FANGs are definitely standout today. And the next one is probably Google, I think, that's coming. If Google comes in strong, that might be enough to jump Amazon up to 10, 20, or 30, sort of on its way up to 1100. But the sense I got this morning with the way the FANGs are behaving is that there's plenty of life left in them yet, in terms of they appear to be fairly relentlessly trying to go to new highs, let's put it that way. And it would only take some sort of blockbuster development. I mean, can you imagine, I know it hasn't happened yet, but can you imagine if somebody came in or a counter offer on Whole Foods? I wouldn't rule that out.
I think there was. I think there was a couple of other offers on the table, and I believe Amazon won out. And on top of that, they've also announced their new home delivery meal kit, which is in direct competition with the company that just went public, Blue Apron, and they've done nothing but spiral down since they went public. And now that Amazon has announced that they're going to be direct competitors with them, it's looking even worse.
Yeah, this Blue Apron thing, it's kind of a fad. That it's a good. Well, it's got. Put it this way, it's one of these. It's sort of getting towards the .com type thing where people were funding anything.
Right.
It's a sort of a fad. Could it actually work? I wouldn't rule. I wouldn't say no, but the amount of money they've raised to get that operation up and running, it's sort of like Uber. Everybody thinks Uber is like fantastic, and it's virtually. I mean, it's not quite bankrupt, but it's heading that way. And I would say a lot of these borderline startups are in the same mold. We're sort of getting up to that kind of area these days. It's like all the stuff on Shark Tank. Half the businesses on Shark Tank would have failed by now if we were in a really, really tough economy. If we were in 2007 to 2009, Shark Tank wouldn't be where it is today. It wouldn't be the huge success. Shark Tank sort of came on right at the bottom of the recession and has prospered mightily because it's prospered mightily from the internet. Because some of the sales of some of these people on the Shark Tank are just staggering, stratospheric. What some people have achieved is nothing. I mean, especially selling kind of crazy things like Christmas jerseys and things. I mean, making millions and millions of dollars.
The Tipsy Elves, and
right.
The other one was Sponge Daddy. That was a huge hit.
Well, that's more of at least it's got
got a purpose, right?
Yeah, and you have to keep buying them. That's the other thing. It's sort of they don't last too long. Those kind of sponges, you have to keep buying them, and so that's definitely. But there's been a lot of wacky ideas have come up with Shark Tank, and I think it's probably getting to the stage for the sharks where it's sort of an overwhelming job to keep track of all these companies now and sort of devote the time needed to make them succeed. So I suspect that if we were to have a downturn, there'd be a real bloodbath amongst a lot of those wannabes kind of thing, because they have to keep to keep growing is very, very hard. And after a while, you sort of, it's like I say, actually came up with this idea the other day. Somebody mentioned that, the top 20% of, really wealth in the United States is really what makes everything happen. The 20% drives everything, and the 80% sort of follow kind of thing. That's really, so that top 20% is what drives the economy, what drives the country, what drives all the projects. And then as you go up the ladder towards the 1% and then the 0.1%, obviously these guys are mega rich, and their incomes have skyrocketed in comparison with the rest of the population. But nevertheless, it's sort of like, when a product comes out, like a new software product or something like that, that there's at least 1 million people out there who's going to buy that just automatically. It's just an automatic thing. I mean, that's sort of what keeps Microsoft going, because that top 20%, they're the kind of people who want the best, and they're willing to pay for the best of pretty much everything, and that's a real big driver for the economy. So, speaking of the economy, it doesn't, the Netflix result that came out last night, 5 million new subscribers in 3 months is really pretty remarkable. And it shows you the dynamic changes going on in the whole streaming TV and, the dish, the war between cable and streaming and dish and satellite TV is, being won by Netscape and Roku and things like that, because these services are getting better, and they're delivering better, better HD and better pictures and things, and an unbelievable variety. So it is important, Netflix is a real big winner, and it's probably going to continue to be because they're going to diversify into other things to try and maintain their grip on things. But remember this, you get a quarter in Netscape, Netflix when down the road, where maybe they're going to lose 1 million or 2 subscribers. That stock will get massacred. It's just the way the Wall Street works, even though it might only be a minor, partial. Look, if they lost 2 million subscribers, the stock will be down $20 in a heartbeat, because Wall Street would get the jitters, on something like that. And that may be, and that, this quarter we're in, usually the second quarter is a pretty good quarter, economically speaking, which is why I believe the growth will actually end up being more than 2% for this quarter, possibly 2.5%, or even going on 3%. And when that's happening, that's one of the reasons why Netflix is doing so well. Remember, we have created 800,000 new jobs, and they're actually quite good jobs. A lot of them are quite high-paying jobs. So the economy is getting tighter, slowly but surely. The thing is that Wall Street is sort of almost a quantum leap above where the economy is. And unfortunately, it's, as we were talking the other day, it's like Ben Bernanke, when he was being hailed as a hero for rescuing the world from the 2009 crash. A short while afterwards, he was saying, it's not happening in my neighborhood yet. He was living in some place like Georgia or somewhere like that. Mm-hmm. And, things were pretty grim on Main Street. And to a large extent, they remained fairly grim for most of the Obama recovery, so-called recovery, which hasn't really been a normal recovery. And I think it's important to keep that in mind, because in spite of the monstrous up moves in the market, we're not really we're not maxed out inflation wise by any means. We're not not necessarily, it's sort of a Goldilocks economy. Are we going to really go into a recession? I'm not so sure. I think, especially with a weaker dollar, which is stimulative to the U.S. economy, and I actually believe that this economy is sort of like a mega move, like no other move in history almost, where we have really been kind of compounding our growth through the stock market right up to where we are today. And the market's going to probably break out to the upside and go semi-parabolic or totally parabolic, not necessarily this year, but over the coming years, right up into 2020, possibly even to 2023 or 2 rather. So I think we're going to run into trouble in 22 in the first in that early part of the decade, I said I'd see it. Look, it's kind of like the Fed. The Fed's sort of starting to murmur about high prices, high asset prices, right? They're not saying, what did Greenspan say back in '96 or '97?
Irrational exuberance.
Right. I mean, we're nowhere near that yet. And so there's been at best we've had a few murmurings, mentions of high asset prices from the Fed. So I actually believe here we are in 2017, where this is a lot like 1997 by some measures. So we could have 3 years of really tremendous markets with some. Remember we had a few pretty big corrections in 97, 98. 1,000-point corrections back then, which was a pretty big deal. At one point, I think we lost 1,000 points in just about a day, and recovered from it. And that could happen to this market soon. Maybe in August or September this year even. But the juggernaut. This is a juggernaut market. That's a pretty good description of this market. It's a juggernaut that's got tremendous annual momentum, cumulative momentum, and it is continuing to go higher and higher in a way that's just mind blowing. And we should, it's a great time to be alive to see this kind of fantastic performance, combined with all the other great things that are happening, which we're on the brink of. Some fantastic breakthroughs, such as flying cars, automatic driving. They just landed a Boeing 737 the other day with artificial intelligence. That's a pretty big milestone. So all this automation of cars and driving is coming, and it's going to look, once it's out there, and once it's probably a year or two away from becoming the beginning of mainstream, but once it starts to happen, almost certainly that 20% of people in the United States are going to want immediate upgrade to a driverless car. They're going to want it because why not? They can do a whole lot more in their commute, which is a waste of time at the moment. The huge amount of hours that everybody has to commute every day. Right. If they can actually do a whole lot more while they're commuting, that's going to be a huge deal that everybody wants. Then you've got, the flying car aspect, on the horizon. You've got energy transformation going on, possibly more electric cars and things down the road. And then there's a hypersonic factor, which is coming in 2018, where I think the biggest thing that's going to surprise everybody in the world is that, when you look at an A380, it's just an unbelievable sight. It's like a flying Titanic. This is just, it's like the Titanic of today. When you think of when they built the Titanic in 1912, 13, 14, people, it was the ultimate in technology. It was a massive thing that had never been done before. And I think the A380 and the jumbo jet and these incredible flying fortresses are an example of that today. But when hypersonic takes over, it's going to render all of these planes, or a large part of the current inventory, obsolete within a matter of 5 or 10 years. They're going to be replaced by hypersonic transport, because people, it's interesting when you see Trump getting on Air Force One over in Paris, and before you know it, he's back in New Jersey. It happened pretty quick. It doesn't take that long to fly across the Atlantic these days, which is amazing. But imagine being able to do that in a couple of hours, and maybe go to Australia in 5 or 6 hours instead of 24. Mm-hmm. When it comes, it's going to be a huge deal. Everybody's going to want these new planes that are faster and probably more efficient, and maybe quieter and altogether better. So, and maybe safer too. So we're at a very, we're at a time where and also don't forget the pharmaceutical sector, where there's a lot of breakthroughs going on that are also driving growth. So, and the the infrastructure bill, I hope they get it done, because it's what's needed. The real answer, the real reason why growth has been anemic in the last 20 years is because the government have been pulling back from their participation in the economy. They've been cutting back since the Clinton years, and they haven't been the driving force behind the economy. In the 60s, why did we grow so much in the 50s? Why was the 50s such a fantastic time? Because the government was building the freeway system and building all these houses for the baby boomers who were coming back from the war. And in the 60s, what was the driving force behind the 60s? Putting a man on the moon involved 20,000 corporations and 750,000 people to put a man on the moon. That was a huge driving force behind the economy. And for the whole of the 60s, the market went up almost record leaps, and there was a record time for the market. Remember you and I, we talked about this when you and I first met, Dwayne, back in the early 2000s, about, I predicted then that I actually said that I thought the economies would grow faster in this new century than the previous century, and statistically actually have been. Now, unfortunately, the U.S. economy has not been growing at the pace that it should have, because it's a mature economy, and it had a very good infrastructure. Back then the infrastructure was ahead of the world. Now the infrastructure is behind the world. We're kind of lagging the rest of the world. We've got to play catch up. But the reason why the Chinese market's grown 9% average for 30 years is because they got a central government that's been driving the economy. And the biggest motivation for them to drive the economy is it's a matter of survival. They have to keep that economy growing, because if that economy implodes, they're going to be out of business. They're going to be out of office, because there'll be a revolution when 300 or 400 million Chinese are out of work, and the music stops and the economy comes to a grinding halt. I'm not saying that's going to happen, but it might happen one day, and you have to be ready for it, because in a way, China today is like the U.S. was back in the 30s, back in the 20s, right before it had its, adjustment and a kind of depression. So fortunately for China, the last sell-off was when it ran up, doubled in a year, and they had this big sell-off a couple of years ago. That was a pretty big scare for the Chinese, and they managed, they kind of actually tightened the economy too much because of the real estate prices and things, and it got on top of them and nearly caused a disaster. But they've managed to come out of it, and it's now contributing, along with Europe, to the rest, and Japan, to the whole world economy. So for the time being, we've got a synchronized global recovery going on, the likes of which we've never seen before. And hopefully and if it is a juggernaut, it could really last for quite a while. I think it's definitely got some years in it still. And even today, look, there's people always talking about crashes every day, and as long as people are talking about crashes, it's highly unlikely we're going to have one. Especially when you got, the Fed, whether you like it or not, they are in control of the markets. They've got the money. They've been using it pretty judiciously to get to where we are, and you can't really fault them for what they've done so far. They've done an incredible job, all things considered, without overheating the economy or anything. That probably is a while away, but I think later on this year the economy might overheat a bit. But it's not there yet.
Well, Amazon. What where won't they go? What won't they do? What won't they try? I mean, this is, I think a lot of companies are becoming concerned. We used to hear talk of companies having monopolies and this and that, but that was when a company owned everything, like all the phone companies or all the movie theaters or whatever the case might be. But Amazon's got their finger in every pie, and every time somebody comes up with a new pie, they stick their finger in it. I mean,
yeah, no, it's incredible.
We've never seen anything like that before.
Yeah, no, we haven't. And it's, Jack Ma with Alibaba is the same. I mean, he's the Amazon of China, and really between the two of them, they pretty much got the world sorted out. They're the two juggernauts, and look, at some point, there'll be. It's just like Apple. I mean, look at Apple today, and remember the last time it topped out. Everybody said it was all over for Apple, and yet they keep going on. They're on kind of a new phase now, and Apple are not. They're not selling the most phones in the world anymore. They're actually, their market share is actually going down. Mm-hmm. And they're being ripped apart by Huawei in China. And there's another Apple, there's the Apple of China. I forget the name of the company. These are very serious competitors. Then you got Samsung, and then you got Google and Motorola and a few others. I mean, BlackBerry even, and small startups. They're all kind of eating away at the coattails of Apple. So I think that when these companies, something will go wrong with Amazon at some point, and then maybe there'll be they get their wings clipped a bit, one way or another. Maybe it'll happen because of government. They start talking about monopolies and things like that, and maybe that has to be broken up or something. That could be. That could happen. That could happen. But maybe people will want to go back to this brick and mortar again. I mean, the interesting thing is Amazon is going in the brick and mortar direction in quite a few areas.
Yeah, they are. They are.
So anyway, just a quick overview on the markets. We've had a pretty good move back up in the Nasdaq off a big sell-off this morning. The rest of the markets are acting kind of off a bit. I wouldn't put it much more than that. The gold and silver are acting extremely well, and here's the way I would trade the gold from now on, and we've pretty much been preaching this, ahead of the bottom and since the bottom, which is you've got to be long. You got to buy you got to buy the dips in gold from now on, because the impulse waves, as long as you get in sort of near the lows, the impulse waves are strong, and they're going to take you higher, because I believe, look, the big lever in the sky has switched over from bearish to bullish, and the gold has gotten a second wind. Look, all the ducks are lined up for a gold bull market. You've had massive short covering by the silver commercials and the gold commercials, almost like nothing before. The hedge funds got very bearish. There's quite a few different indicators that just came out in the last week or so, that almost every time we've been in this situation, as we were about a week ago or two, the gold's actually gone up about 18%. That's a pretty big move. So we're pretty much set for a move of that magnitude right now, which basically means we're headed up towards 1400, 1450, probably by the end of the year. And I think the silver, likewise, here we are. It's middle of July. The middle to late July. We've got August, September. We've really only got about 6 weeks now to get from $16 to about $18. And by my reckoning, if we get to 18 by September, the silver reversal, just from the fact that it went down from 18 to 14 and came all the way back up, you got a measured move that's going to take you up to the 22 level at least on the silver. But I honestly believe we'll be in the mid-20s before the year is out on the silver. And I think we'll be in the 1450s to 1550s in the gold before year's end as well. I think it's virtually inevitable. And just on a simple basis, you can't keep pushing these other assets higher without gold, getting some respect for what it is and just appreciating along with everything else. Don't you think?
I do. I'm curious how these cryptocurrencies are going to affect the appreciation of gold. And of course, there's a continued problem of the selling of paper gold, which, really just isn't gold.
Yeah, that's the wild card that you just can't, determine exactly, because look, the weird thing is Bitcoin's been totally massacred here in the last week or two. And yet gold is going higher, it maybe, and look, the Bitcoin is a sort of a tulip deal. It really is emulating the tulip boom, and it may, could it self-destruct? It's hard to say, but we've seen it before. We've seen it run up and just get totally beaten to death. The last bottom in the Bitcoin, when this guy from Silicon Valley was buying up all the Bitcoin he was getting his hands on, he could get his hands on, he bought up all the government auctions. I mean, it didn't look like a very good move at the time, to be honest with you. You sort of scratch your head and say, Jesus, what's this guy's, I mean, he basically bought everything, all the Bitcoin in sight when it was down in the 150, 200 zone, So, he's a very smart guy, and he's had an unbelievable payoff from his action. I mean, it's just incredible for him. But remember, he's probably been selling up around 2,800 and maybe unloaded a lot of it up there because he knows that trees don't go to the sky. So, you've got it. There is that. You got a lot of people who are sitting on Bitcoin fortunes, who are trying to get out maybe, or want to get out near the top at least. So, well, listen, it's great to be. This certainly sounds better on this mic with you than normal.
Yeah, it's completely better. Yeah, I'm glad you managed to get this set up. You sound crystal clear. The tone and quality of your voice is completely different.
Super. Well, we're going to continue it every day, and thanks very much for the invite. It's always a pleasure.
Everyone in the audience said to tell you it was way better. So
thanks.
All right,
well, it's an honor to be on with you. Thanks very much, Dwayne.
All right,
thanks.
We'll see you tomorrow.
All the best.
Okay.
Bye.
All right. Okay, I'll hit mute there. Okay. And that's going to wrap it for us here, guys. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.